In this video, learn how to prop firm thinks differently about trading risk than an independent trader to grow elite traders. Hi, I'm Mike Bellafiore, co-founder of SAMC Capital, and we're a proprietary trading firm located in Midtown Manhattan. And I'm also the author of the trading classic, One Good Trade, and the playbook. In this video, a developing trader, Sebi, during an in-depth trade review, tees up an important discussion about trading risk. Are you thinking about trading risk the right way so you become a successful trader? Let's get to work on sharing this important trading lesson from our prop desk so you can grow your trading account. Let's give a little context as to who you are.
Perfect. So, my name is Sebi. I was a senior intern, and then I got a full-time offer to join the desk after my graduation date, and I'm just waiting to graduate school now.
You got an offer?
I did. Luckily, I got an offer.
I'm kidding. All right. So you got an offer. So you were a senior intern. You got an offer, and now you're hanging out at school and doing some trading. Are you on a team? Are you placed on a team yet?
I am not placed on a team. That is the next step for my trading. The team that I'm kind of most looking forward to joining would be Team Max, just because more of my scalping background and more of my tape reading skills.
Okay, good. And how much trading are you doing while you're back at school, if any?
So I'm doing trading every day that I don't have midterms. So that's kind of my rule of hand, to not kind of mix school and trading too much. So today was no trading as I have a midterm later today.
All right, great. Let's see the playbook.
Perfect. So this is my scalping momentum playbook. And basically this is kind of basically reading tape skills trade. And just to give some basic market context, even though it's not very that necessary for this kind of quick trade, but market context is markets have been relatively weak compared to the past 3 weeks. And in the past 3 days, SPY is down 2.05%. And then Qs are weaker than SPY as they are down 3.04%. And then IWM is only down 2.5% in the past 3 days. Bigger picture of SPY, we broke this uptrend that we've had and we're pulling away from all-time highs. Bigger picture for Qs, Qs are nearing swing low and they are also pushing away from all-time highs. And then IWM is just in a 7-month range. But this is where it gets interesting for AMC. So in the past, on this initial run-up, 40 was a very important level, as on this day we gapped up and then we blew by 40 and had just a crazy range on it. And so 40 was an important level in the past, and then in the most recent pullback, AMC has spent 4 days at consolidating around 40. AMC is also nearing a swing low, and it's in the middle of its daily range. And this is the pullback where it kind of retraced back all its gains from this another leg up.
So where do you think you are on our weekly chart or daily chart?
On the daily chart, so we're kind of in the middle of its daily chart range.
You think we're in the backside, or you think we're...
I still think, I'm not doubting that there could be another leg up, but I'm also not saying that there could be a leg up. I'm just prepared mentally if we do see another leg up.
You think we're in the middle of the range, or think we're in the backside, or think we're holding support for another leg up?
I still think there could be some more momentum seen in AMC.
To the upside?
Yes. And this trade was taken back a little. It was taken on the last day of September, so it was a little while ago.
If you want to learn 3 more real-world setups that our traders use, including the simple setup that we teach all of our new traders, and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing now at the top right-hand corner of your screen. That will open up the free registration page in a new window, so don't worry, you won't lose this video. You can also visit tradingworkshop.com to register for this free intensive workshop. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
And then, so the fundamentals, the most important fundamental for this specific trade is paying attention to its ATR. AMC's ATR is 2.92, so close to 3. And that's kind of the most important statistic for the trade that I took. So context technically for AMC on this day, it's at the bottom of its 5-day range, so very weak, and it's above a swing low on the daily, so in that range still. And on the day, it gapped down 1.26%. And before the volume and price spike, AMC was doing low volume as it only had RVOL of 0.65, so very low R vol on the day. And then even with the volume and price spike, it still traded below its average volume number of shares. I believe it traded at 65 million shares that day. And that's another important key thing to state. So my execution plans, so there's failed entry. I want to look for any failed follow through or breakdown of previous levels. And because of this, I'll be hit in full size. So this is not like a strategy where you would want to kind of scale into it. Once you hit in, you want to be max size, and then you want to manage it from there. The potential reasons to sell is a quick move to the downside, and I want to take off 75% of my core position there. Or if big bids are stepping up and price is unable to get below a price and price gains more momentum towards the upside, that's when I want to start covering my short and working on.
So when you say fail follow through, what do you mean by that?
So failed follow through, what I mean by that is we'll see on the next chart, but this price suspension really made AMC jump up a few points at a time. And when that follow through is not there anymore, when the momentum, when offers are not stepping up with such ferocity, we want to be able to notice that and take advantage.
So do you need fail follow through after a spike?
Yes, after a spike.
How are you defining a spike?
So anything with above average volume and then above a 75-cent candle or range.
How'd you come up with that?
So I kind of look at the average kind of number of 1 minute bar ranges in the past kind of like 5 days. And then I also look at the average volume. And basically what I kind of look at for a spike is I want to see extra volume, and with the extra volume, I want to see there being a bigger move that kind of backs up the volume and kind of states that this kind of move was a well-placed move and that the volume backs it up. And then, so the only thing that I'm still working for the strategy is I'm still working on keeping a core of 25% for the end of the day. And because of this, you'll see I kind of developed technology for this to kind of work out with 25% of my core because I want to be holding for a little bit of a bigger picture move. So AMC on a 1 minute, you can see on the first, I guess, half of the day, it's unable to break lower and it has very low volume. Even on the attempts to break down, there's not really that much more significant volume than the first 30 minutes. And then once we get kind of in the midday phase, we can't break lower. We have that slow grind up back into VWAP and then the reclaim of VWAP, and we get back to the top of the range of its opening range. And then to put more emphasis on the price and volume expansion, you'll see that we only really get volume once we break out of its opening range. We only really get that volume once we break to the top of the range. And this can clearly be stated that each volume kind of upheld its volume. The range on the day is 7.96, which is 2.7 ATRs. So it had a very huge range for the low amount of R vol that had. And that was one of the things that really made this trade more interesting than other trades, is that it had much less volume than you'll see on this kind of move, even on the day. And then to kind of show you what failed follow through would be is we had this before high days put in. AMC had a $1.46 move on very high volume in 1 minute. And that's a very fast move, and that's purely momentum. And that's kind of after that, we want to see kind of failed follow through and see it kind of push down. And it's kind of interesting that this move happened and it consolidated a high day and then it pushed down lower. And I took note of that.
You know, question is, why didn't you think about getting long there?
So I did trade the long here. I took the long above opening range highs, and then I also took the long above pre-market highs.
And did you scalp it or did you hold it?
It was just a quick scalp, just because I saw that the amount of volume was coming in, and I thought this could be something new, and I really want to just be more observant and kind of see what happens and take note of what happens.
Okay.
But I did trade on the long side, which makes kind of this short more interesting because I knew what I was looking for in order to see the momentum to the upside. And when we weren't seeing that clear momentum to the upside around the top of the range at 41s, it was a little bit more clear for me because I did trade on the long side.
Yeah, what you said is really important. You were able to see, you're watching the stock, you watched how it was going up, and then you were able to see better when it was going to go down because it was different than how you watched it go up.
And then the other important thing that kind of helped me with trading on the long side before was I kind of knew what levels were soaking because I was watching the level two more intensely. So I kind of had more kind of like critical areas that I was watching because of them.
But that's good. That's very good trading there in terms of determining when you might want to get in on the short side, noticing that difference by how it went up. That's very effective scalping. That's very effective active trading. I just want to highlight to you that you're doing exactly the right thing there. That's exactly going to lead you to an edge for that scalping type of trading. That difference. It went up. This is how it went up. That's not there anymore. Now it's more likely to go down. That was very good.
And one of the things I kind of put in my scalping is just simpler is better. If I can dumb it down to the simplest form, I'll make my trading much easier in the long term, I believe. And then again, just to put an emphasis on this $1.46 move in 1 minute on very high volume, that was a very important key thing for me. And we really didn't see that before. And then just something I noted also was that IWM on the day did not really reflect this move on AMC and ultimately just closed that low day.
Are you following AMC on a regular basis?
More and more now that it's above 40 again.
Strikes me as your results will be better if you were.
Yeah, so I'm always keeping an eye on the ranges and seeing kind of, recently I've been doing a lot more work with volume, VPOC, seeing the VPOC of the day, seeing where the most volume traded was on that day price-wise. And that's how I've kind of keeping up with it. So then, starting off, this is my first execution with the short. You'll see after trading the first breakouts, we were kind of getting extended without really having any pullback, and I was just looking for us to get even more and more extended because that's one of the factors that makes this trade even better. So I entered full size when we failed to push higher than 38.8, which is the high of this bar. Once bids dropped the whole $1.38, that's when I really got short. So the high of that bar was 38.08, so I set my stop very tight at 38.10. Once I got short after 38, I covered 75% of my momentum lot into 37.65, and then I covered the rest into 37.80s as that 37.60s kind of held up. And I have the tape on this, and I'll be going over each individual executions after the last execution.
So did you cover that because it wasn't really working? It wasn't really going down, so you covered?
Yes, I saw bids kind of soaked up 37.60s, and after that, I like to cover 75% of my position. And also, I don't know why, but it's around like 40 cents where I typically cover with these kind of moves with AMC specific, looking back at my stats. And that's just typically where I start covering. My next execution was I entered full size when AMC failed to push higher than 40.50. And bids stepped under 40.50. So you'll see that we had this big move, try to get back above 40.50. And then once we pushed higher than 41, bids dropped instantly. And then below 450, that was kind of my hit point. So I instantly hit in. I covered again 75% of my position at 40.19 and then the rest at 40.09. So you'll see it's right around that 40 cent area where I typically take full profit. My third execution was once we failed to push higher than 41.50, and this is right after we got that $1.46 move. We tried push higher multiple times, and offers just were stepping down and kept on pushing price lower, and not pushing price lower, but just not being able to get back above 41.50, which is something I noted. So I got short as bids dropped 41. Once we dropped back below 41, I only had a very tight stop just because I knew that we were consolidating around this 41 area and it could push higher, so I wanted to keep very tight stop. So I only had to stop at 41.05. I covered 50% of my position at 40.80 just because it didn't drop as hard as I wanted to, because after consolidating for this long, we should see a hard drop kind of like this candle, and that's the kind of move I was expecting. And since we didn't really get that, I covered immediately 50% of my position. And then once it kind of started curling back up price at 40.95, 40.98, that's where I covered the rest. And then this is the move that I was looking for the second, for the previous try. And because wasn't involved in this move, just because I thought it could also had the possibility of breaking higher, I waited for this entire 1 minute to be finished. And I kind of treated this trade as failed follow through because we failed to follow through higher at 41.50, and we also saw this downward momentum. So I entered full size on the continued downside momentum for the breakdown of 40. This is more of kind of an anticipatory scalp, and where I got filled at 40.24. Because I didn't get that hard flush below 40 that I really wanted to, because the bids were decrementing there where it should have just flushed hard around like 40.80. I covered at 38.80. I covered at 39.95, 75% of my position, and then I covered the rest when I got back above 40. For me, this is kind of more of a missed opportunity because I kind of game planned for this, and I took note of a lot of things that happened in this particular 5-minute range, where we had that $1.46 move, which was very harsh momentum to the upside, and we also had this 5-minute consolidation where we had downward momentum. And this is where I really want to work on that, keeping that 25% of my position, because I found a technology that kind of backs up the statistics for this trade.
So for each of those 3 fade trades, each of those 3 fade scalps, were you risking the same amount on each of the trades? Was your size the same on each of those trades?
I was risking the same amount for each trade, and that's one of the things I really want to work on for this trade. You'll kind of see on the review section, but I'm working on factors to work on my sizing. So for example, looking back at it, this was definitely one that should have been sized up because there's so many more factors involved with this specific trade.
So we agree, I just want to be on the same page here. So we agree that we want to do a better job identifying, of the 3, which ones merit more risk.
Yes, I believe that even though it's a similar style trade, that there are many factors that come into it, so they have to be sized in differently. But for all of these trades, I was sized in the same, just because I was trying to keep it consistent.
We had a good conversation at Traders for a Cause this weekend about this topic, and I asked Dan G a question on risk. It was Nano, Armand, Max, Dan G, and myself. I was moderating. We did a panel discussion at Traders for a Cause. And I asked Dan G whether or not he sizes his positions the same for each of his trades, whether or not he thought it was important to understand which of the trades were better and for which you ought to put on more risk. And he made the point that 100% part of trading is understanding which trades require more risk, and that there's a shift when you recognize outsized opportunities, and that one of the things that I supplemented to his answer was, as prop traders, this is something we do very differently than other people, and that is in terms of how we think about risk. As prop traders, we are taking on risk. As prop traders, we are aggressive. As prop traders, we're aggressive, but we're responsible. And what I mean by that is we study in our trading the moments when it's time to push, the moments when it's time to put on risk, the moments when it's time to really be aggressive. And you're working through this, we understand for our personal trading what those moments are. We understand those opportunities are how we really make our money. So you're looking at the stock all day long. There's going to be the moment, the opportunity where you can really make money. And it's not that you can't make profitable trades before that moment. It's not that you can't make cash flow. It's not that that cash flow type trading can't add up. It can. But I really like how you're embracing, accepting the idea that we're trading, and then we got to go for it. Now we're clever about when we go for it. We're studious of when we are going to go for it, but we're going to go for it. And there is some trading education out there that will suggest, hey, every trade you ought to risk the same amount. We think about risk very differently than that. That is not how we think about risk. We think there are moments, there are times when it's risk on. No guts, no glory. Pedal to the metal. Go for it. And we think during those moments, we think, A, if you don't know what those times are, you're not going to become an elite trader at our firm. And B, when those moments come, when you see it, when you should be more risk on, that if you do not put the risk on, that is the real danger in trading. That's the real risk in trading. It's more risky not to put risk on when the odds are in your favor, when you're seeing it. That's real risk. Not being willing to put the risk on in those moments. That's real risk. That's way more risk than any of the other trades. That's the real risk. You have to go for it when you see it. And so I like you thinking about what those moments look like for you. I like you thinking about the variables for what those moments look like for you. I encourage you to dive deeper into your winning trades so that you know when they are.
I could not agree more with you. Speaking with Dan G over the summer, that's exactly the biggest thing that I learned from being on the desk this summer, was that I feel worse as a trader when I don't put on size when there is an A+ opportunity, when let's say I do draw down on that A+ opportunity rather than not taking it. And then right here, I just wanted to show the tape of the 3 executions. The first one I did not get on record, but this is the second execution when I tried to push above 41. So here you'll see we're at 40.80, and it's still a very tight spread. We hit 41, offers immediately push lower, and we cannot get back above 41. Once we drop 40.50, that's really my point where I got short. So I got short there at 40.34. Once we had that big down move and we couldn't push lower than 40.09, that was kind of another key level. I wanted to make sure to see what happens if we do test back at 40.09. We got above hard flush. That was the biggest mistake I had after that level of 409. I not covered below 40, and I really should have. And once we kind of just leveling off at 40.09, that's when I started taking off more of my positions. So I got to be a little bit more quick with that. And I just have to be more aware of certain levels. And it's a lot clearer to go back over your tape. And I highly suggest anyone do this, is recording your tape and going back and looking at certain things that you may have missed. And that was something I definitely took note of.
Yes, yes, yes. Agree 100%. And that's going to make you better. I'm sure that you went back and looked at your tape so that you can see the nuance in the moments where the tape was clearly showing to you it was risk on.
And so that was definitely the biggest missed opportunity in the execution. The next one is, so then this one you'll see, this is another failed follow through momentum. You'll see we try to get back above 41.50. We have pushed up higher, but then completely wick lower on the 2 candles before. So then we dropped 41. I got short as it dropped, so I got short at 40.90. Bids are not really dropping with that high as I wanted, but then when we get down to the 60s, you'll see how we firm up and then it shoots up another 12 cents. And because of that, we firmed up at 40.60, and then we saw that immediately push back up, and we didn't push any lower. That's another reason for me to cover immediately. So these are very quick scalps and 100% based on tape decisions. And then the last one, which is the biggest missed opportunity for myself, was after consolidating and not getting that move that I wanted, because we had this resistance at 41.50. We have this big down move. And after this down move, I want to see continued down move momentum. And I don't really want prices to go up anymore. And this should be it for it. And I want to anticipate this 40 break. So I got short here at 40.25. And you'll see once we had that immediately flush, we hit 39.84, but then immediately spiked up another 20 cents, and that kind of firmed up. So you'll see you have to be very quick with these. And one of the things I've been kind of playing around with for this exact strategy is taking off some limit orders, taking a profit off with limit orders, and having kind of an already kind of idea of where price should be from a down move. And that kind of makes it more of a risk-free trade where I don't have to be as quick. And it also helps cut down on my commissions.
All right, so a couple of things about that. You want to go back and look at the tape and see if you can recognize around that 4150 level if it was giving you signals that it wasn't going to push higher. So it went up, it pulled in, it went higher. It pulled in, it went higher. It pulled in, it went higher. You should probably be able to go back and see some signs that it wasn't going to push higher, that the resistance at 4150 was different. Can you put on a short from there? Second thing, and if you can, you want to think about shorting that and covering above the high. You should be able to see that difference on the tape. And if you can do that, that's a good tape reading skill to add. Second thing, when you shorted 4020s, that's pretty far away from 4150. I think you shorted 4020s, right?
Yeah.
So that's really far away from the high of the day. That's a bad price. That's okay if you're strictly playing the momentum. If you're going to get in something that starts a deep red candle like that, and you say, well, this is the signal now that this is going to turn around, you can't let that trade against you at all because you got a bad fill, because you're in at a bad price. You're being really aggressive there. You can't let that trade against you. So if you're going to hit that in the 4020s, that's got to be ticking down. As soon as that stops ticking down, you got to get out. But what you should be thinking about doing is shorting the pop. If you think that red candle showed the reversal, then you can play the momentum as I described initially, but then as it pops back up, that red candle may denote the backside's in, and you can start to short the pop against that.
I completely agree. So yeah, if I was risking, no, I'd be crazy to be risking high of day at 40.24 fill, but that's something I definitely should be getting back in, because if we did consolidate around 40 and pop back up to 40.50s, that's another permutation that I should be thinking about shorting there. And to go over some of the ways that I've been trying to improve this trade is acknowledging when I should be sized up. So because this execution style requires multiple re-entries, and I should be knowing when I should be pressing size. So I'm just currently keeping my sizing consistent until I find the exact variables that kind of make better trades of this permutation work. And then I'm also working on holding 25% of my momentum up for a bigger move and not just a scalp, just as we see in the next slide. But currently, some of the ways that I'm working on sizing is by kind of keeping account of what's going on. So for example, a bid drop trade are going to be fairly consistent and are going to be low risk. A bid drop trade plus from failed follow through, that's going to be even more a risk I'm going to be willing to put on, or then even a bid drop trade plus a failed follow through trade plus a big down move after kind of seeing that kill candle move. That's one of the things that will put on even more risk, and that's one of the things I'm kind of learning about the strategy. I'm also trying to work about learning different permutations that can happen. So for example, I get short if offers step up and hit my stop, but then it bids immediately drop. What would I do in that permutation? And I'm kind of working out on different situations and how I would react, and kind of just when I'm meditating, that's one of the things I really try to think about.
We call those if-then statements for those playing at home.
So then the technology I kind of developed for this is obviously being up almost 3 ATRs on the day. It was up, I believe, 15%. And I was just curious to see in the back and like for back testing reasons, seeing how many times a 15% high has been put in an AMC compared to its opening price, and then seeing on average where does it close. And this is kind of just giving me stats to kind of back up the trade, and kind of just gives me another leg up on my psychology, knowing that statistically I will be a little bit more correct to hold 25% of my move. So on average, the high midpoint, what I categorize as a high midpoint is the price of the open, of the high, and then whatever the midpoint of that price is, and then seeing if it closes below open. So for this exact percentage, 15%, if it has a 15% high, it'll close below its midpoint around 41% of the time. And then if it has a 15% high, it'll close below its opening price around 18% of its time.
Hey, so how much are you trading? So right now you have a break, and you're trading every day?
So this has kind of been a blessing in disguise. One of the things I've been talking about Dr. S with is kind of focusing on the better trades and not trading as much. So for example, the month of September, one of the things I did was I cut my average number of trades a day in half. And that really helped me just be much more selective and just focus on the best opportunity of the day. So I'm averaging around 3 days a week trading.
And then what about when you're in school? Are you trading less when you're in school?
It's still around, so I'm not on break right now, still just in school, but on break I'll be trading every day, but in school around 3 days a week.
And you're trading the open, you're trading the open and the close, you're trading...
I'm trading the open, so I scheduled my classes, so I don't have any classes during trading hours, which is very lucky for me.
All right, good. Well, I'll speak to Max.
I was going to plan on sending him my monthly review as well as some other technology things I've been working on.
Well, I mean, it might be interesting to get on his call.
That's the one thing that I'm still asking myself, how can I provide value for Max? And I think working on more of the statistics could help out more.
100%. That's actually really good there. That's a good idea.
So I think that's going to be my way of bringing value for him.
You know, we were out in Vegas recently. We missed you.
I know. I was like, that's only an 8-hour drive. I should make it there.
Not that far. I don't know where you were.
I was only...
Speaking of Max, I heard Max had a really good time.
I saw everyone was blowing it up on Twitter too.
Hey, go ahead and click our subscribe button so you don't miss any of the videos they were producing for you in the trading community. And please take the time to add your feedback in the comments section for what videos you'd like for us to produce next and what you found helpful from this video. From all of us at SMB, train and trade well.